following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And for some reason, I've got no volume in my headphones, but I'm not exactly sure why. There's a little. Anyway, it is another wonderful day here at TFNN. And of course, as always, I am your humble and lovable and squeezably soft host, the koala bear of Wall Street, on a day where we don't have a lot of movement. And I'm not surprised out here. I suspect they are holding up the market into fund buying, which should probably start with a bang on Monday morning. But unclear at this time. 2110 on the S&P cash. We're off half a point with under 2 billion shares. There was a question in the den if we're building up steam, and I think the answer is yes, we're building up steam, and we're going to break out. I think there's an 80% chance we go higher, maybe 2150, 2160 or something. It happens in a couple of days, and if there continues to be no volume, more likely than not, it's a false breakout. If we get volume, my guess is that we'll have a pullback on light volume back down to this, pretty much about these levels right here. And at that point, you'll have to make a decision. But I think if you come back on light volume, you've got to say it is a breakout with volume and a sign of strength. So Monday, Tuesday, we'll see most of the cash coming in from these markets. I have a feeling if you're a fund manager, you just as soon wait till Monday or Tuesday in case something bad happens with the government closure, with any number of things that can go wrong out here. But volume is incredibly light at these high levels, but no pullback. And when you see either a stock or an index like we have right now that just hangs out at the highs, it's probably the probability is about 80% you go higher. The question is just when do you break out? And whether it's a false breakout or not. But the odds are incredibly high that you do go higher, that you just don't have a pullback from this level after 4 or 5 days of going sideways up here. It is more than likely than not you do go higher. And especially with fund buying on Monday and Tuesday, I think Wednesday we're going to have a good idea what the longer term is. On the shorter term, I'm looking for stocks with high short interest to buy before the close today. I haven't found any yet, but I will continue looking. In all the newsletters right now, I'm pretty much cash. We have one position that's a longer-term position in the Attack Insider that it's doing very well. But other than that, I'm more than willing to be and stay in cash. If you are a big fan of the Karate Kid movies, Mr. Miyagi had one thing to say. He said, best way to avoid a fight is not be there. And for the most part, I don't want to be in a fight as this thing goes higher. I think I want to make a decision after we get a chance to. But probably some good money out there being set up for next week. But for the most part, it's very tough to see anything out here that I want to buy and take a chance on. I would much rather play the opposite move after the next move out here. If we come back down and pull back down a little bit lower, I would probably be tempted to go long into at least a pop and then sell the pop and then see whether or not the pullback on that pop gives us any kind of indication whether this is a false breakout or not. But hard to tell. Anyway, another wonderful day out here at TFNN. And what else can you say? That's pretty much it. Of course, we always like to start off with a little bit of histoire.
That it's all just a little bit of history repeating.
It's a week before President Franklin Roosevelt is inaugurated in 1933. The stock market forecasts a gruesome future. The Dow Jones Industrial Average closes at 50.16. That's right, 50. That's 50.16. New low for the year and barely above its all-time low of 41.22. This is the last low to buy, I think, out of this market. Of course, just about 6 months earlier, it had set that low, but stocks are selling at about 65% of book and 10.3 times reported earnings, with an average dividend yield of 8.7% among those that can afford to pay the dividends. And of course, 5 days later, kind of everything goes up, and most of it was based on the belief that there would be a huge amount of financial printing and financial reforms. The market is 23.8% higher by the end of June in that summer, and it doubled, and that was about it. Then it just kind of went sideways until after the Second World War, maybe a little slightly higher. But there wasn't a lot of money to be made in those dark times, but it did get better. Of course, it took a world war, but it did. And of course, right now, we are living with a Fed that doesn't want that same thing to happen. Unfortunately, it does seem like any kind of actual growth is minute. We saw that in the GDP numbers where they got revised down rather significantly, I think from 2.8 to 2.2 this morning. We also see some other things out there that would lead us to think that the market's maybe a little bit ahead of itself. And I think that's weighing a little bit on the indexes today. Of course, if you hadn't been watching the news, Leonard Nimoy, the movie star and television star of Star Trek, died today at 83. As a tech guy, it was always interesting to watch the initial run of it. I wasn't a big fan of later versions of Star Trek on TV. The movies, some of them were good, some of them were bad. Most people didn't know Leonard Nimoy, and I couldn't say he was my best close personal friend. I did meet him twice, though, over a number of years doing special effects out in Hollywood. And most people don't know him as a absolute brilliant investor. Leonard Nimoy was... he had several TV series before Star Trek. It was, I think, Mission Impossible, Star Trek. He had several other things. He started making money about 1960 and took most of that money and was buying houses. He went in pretty much in the doldrums of about 1975, took all his money, started buying business property. In fact, he almost owned all of where was Johnny Carson out of? I'm trying to remember there. Not Brentwood. Anyway, wherever Johnny Carson's studio was out there in L.A., he almost had bought up the entire town. And some people are speculating that his total wealth was somewhere between $750 million and $1 billion. But he bought up almost all of the area surrounding. I'm trying to remember. I've been to the studios there several times, too. I'm just having a mental blank. Yeah, Burbank. Thank you. He bought up a massive amount around Burbank and actually leased the land that I think the Carson Studios are on to NBC. And in fact, I went to a lot of businesses around there in the special effects area, only to find out that his, forget the name of his company, but a lot of them were all renting from him. He had bought all the choice spots and a lot of warehouse space, and he just kept building and buying and buying and buying. Of course, he was also a good director, made a lot of money off 2 Men and a Bear, 3 Men and a Baby, and he had about 4 or 5 movies that he directed that most people, he was just kind of quietly in the background, made some good money off those. In fact, I think he made nearly his cut of 3 Men and a Baby was like 10 million or 15 million bucks. And that was what, back in the 80s or 90s? Anyway, made money everywhere he went. Quite the businessman. And from last I heard, somewhere between $500 million and $750 million did he put away. So we will bid him adieu. And of course, all the kids boys that are living still in their basement of their parents at 40 years old will probably all be crying. But I give this salute to him.
I have been, and always shall be, your friend. Live long and prosper.
And time to move on. Anyway, we're going to be talking about the FCC deal. I spent a lot of time this morning trying to go through a great deal of what was out there. I still suspect that a bigger issue out here is the municipal broadband part of the decision that is not getting a lot of coverage, and mostly deciding to focus on the FCC net neutrality part of it instead of the municipal broadband part of it. There is not a lot of options for people that want broadband, and probably 50% of the of the United States has at best a duopoly, and a lot of times a monopoly. And these people, I think they probably were too clever by twice. Even all the cash that they threw into Washington, D.C. did not save them. But we'll be talking about that in the 4 o'clock hour with Tom O'Brien. And in the meantime, we're going to get to charts because for a market that's going nowhere, we've got a lot of stocks out here that are moving, interestingly enough. Now, I've never seen this company before. I'm assuming it is a Chinese company. Zaiwen Real Estate Company. I'm sure I'm pronouncing it incorrectly. But a little penny stock out here actually getting a lot of love, up 55 cents or 21, almost 22% right now. They had their earnings call, and I think a lot of people were thinking that a lot of these companies were going to go bankrupt. Not doing so bad out there for a penny stock in the Chinese market. And I think, hang on a second, let me... where's my profile? There it is. Develops residential real estate properties for middle-income consumers. I can't even say it. Primarily focused on the Tier 2 and 3 cities in China, outside the major 40 cities. The company acquires development sites throughout public auctions. It's getting some great deals. I'm reading the articles here on a lot of people that had to bail out of properties, and they're doing well. We'll be back in a moment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And it's all quiet on the Western Front, so you can, at your leisure, call me at 877-927-6648. That's 877-927-6648. If you are a subscriber to the Tech Insider, it is now out and flying around the bit streams to you at the moment. Anyway, trying to think about what I wanted to get to. There were a few things. I'm going to get to Weight Watchers here in just a second. So was somebody that made a comment this morning in the Tiger's Den, so I'll bring it up today. Last fall in September, if you remember, the VIX indicator, the way it was calculated was changed. In the old days, and for however long the VIX had been around, it was a rolling oscillator between expirations that were at least 15 days out and then ones that were at least 45 days out. And so you would always get this kind of little hiccup in it. And it would act a little funny, sometimes people would think. And we've got the same thing now. Now, in September, they changed that so that it is basically 24 days and 36 days instead of 15 and 45 days. So you have kind of a oscillator of both those time frames. And it does change things. So if someone's wondering why the VIX is acting a little weird, I give kudos to the gentleman that actually saw that, didn't understand the underlying reason, but did understand that it didn't seem to be acting correctly. And when you get those rollovers and hits, a lot of things do change because you're basically moving out of one set of expirations into another. And what else can you say? But they also include the weekly options on the SPYs too. So just know that. Now, if you don't know the VIX and haven't spent a lot of time with it, you can go to the CBOE and Google the white paper on how the VIX is calculated. There is a lot of higher math in it, but I think you don't really need to calculate it yourself, but it is necessary if you want to trade it or understand how the VIX actually moves. But they have a white paper on there. If you need it, you can always email me at path@tfnn.com. I'll be glad to send you the link to it. But part of trading the VIX is always knowing that you'll have a little contagion on that day when you're 24 days out of expiration. Of course, expiration in March is the 20th. You got the 27th here today. So you're seeing that whole rollover period. And if you're not familiar with the VIX, it is basically an oscillator of out of the money puts and calls. So it is only premium. There is no intrinsic value to them, at least what's put into the calculations. And that's why you'll see a lot more move in the VIX than you will in an underlying market. If everybody gets suddenly bullish or bearish, you can see a huge move in it. Interesting. Oh, we were back to Weight Watchers out here. Of course, Weight Watchers losing a ton of weight if you wanted to measure the cash that their stock was worth, down fairly significantly, and very interesting topping pattern out here. It's been bouncing against the $30 range for a while until it just literally fell apart. This is almost always a good season for Weight Watchers, i.e. a lot of people joining it right after the Christmas holidays. Not so much now. In fact, pretty horrifically bad. And the question may be that as many gals as they get to pack on the pounds and then take them off and say, come on down to Jenny Craig or Weight Watchers, they may have already gone through all those women, or enough of them, that it's tough to come back and get back. But down on a massive, massive volume. And this thing has been coming down for darn near forever. I'm trying to find where it actually comes back on the other side. Basically, we blew through the March 4th, 2009 low today. And, I mean, you just keep going back and back. Weight Watchers is broken. It is a broken stock. I would assume that this thing's probably going to $5, the way that this setup is here. And, maybe does it bounce a little out of here? Yes, but normally when you get stocks that break this hard and are down to 10% or 15% of their highs of just a year or two ago, that basically tells you there's something truly broken in these stocks. Anyway, I got some people emailing me, so I'll send those links to them during the break. You can always give me a call at 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And another stock that we have that is to the downside today is Internoc, ENOC. Probably not a favorite of everybody out here. Not a well-known stock. A little more well-known today. ENO, did I type it wrong? ENOC. There we go. Down 25%, downgraded by Needham. Reported a fourth quarter loss and guides basically guiding way down. I didn't see why they said that. Maybe I've got it out here. This was out after the bell last night, but interesting stock. We'll get you a profile here. Provides energy intelligence software and related solutions for commercial, institutional, and industrial customers. Power grid operator and utility company offers energy management applications. A lot of software to run energy in utilities. Cloud-based analytics application for managing energy across customers' portfolio. Supply smart software. Anyway, down and guiding down, huge volume. And of course, when utility stocks or stocks that depend on utility head south, that's all to it. There's a October 15th low at $12.29, and that's 770,000 shares. We're already into that candle today. and with 1.7 million shares. So a lot of these stocks getting a little hammered. Again, you can call me at 877-927-6648. That's 877-927-6648. You can email me at path@tfnn.com, or you can post a message in the den. On the upside out here is Clean Energy Fuels. Clean Energy Fuels, Freudian slip, CLNE. And that's up $1.12. Some of these small stocks really moving out here, up 22% today. It had a big earnings beat out here. Let me see. The gas utilities company beat analyst estimates by earning revenue for the fourth quarter. Clean Energy Fuels reported earnings of 11 cents a share for the fourth quarter, above estimates of 17 cents a share, of a loss of 17 cents a share. So, wow, what a swing. A loss of 17 cents to actual earnings of 11 cents. That, well, you'd think it would move a little bit more than that if that was true. Company said it delivered 72.4 million gallons of gas in the fourth quarter, up from 55 million gallons of gas a year ago. Clean Energy Fuels delivered a total of 265.1 million gallons in 2014, up from 214 million gallons in 2013. So, what else can you say about that? Maybe that tells us something out here. But a big mover. AM Castle and Company. I don't think it has anything to do with the television show. This company, together with subsidiaries, operates specialty metals and plastics distribution. We've just known how bad copper and iron ore and a lot of those other ones have been. This one sells specialty grades of alloys and metals, as well as specialized processing services. It offers alloy, aluminum, nickel, stainless steel, carbon, titanium, basically all that stuff. Pretty horrible outlook from these folks. Let's take a look at the headlines and see. Reported out here this morning, looks like the Oak Brook, Illinois-based company said it had a loss of $1.67 per share. Losses adjusted for restructuring costs and non-recurring costs were $1.64 a share. Revenues of $231 million in the period. For the year, the company reported its loss widened to $134 million, or $5.55 a share. Wow. I wonder if this company can make it. I'm going to have to dig into this later. But this is another one kind of looking like Weight Watchers out here. Just a horrible looking chart. And you're going to have to see how much cash this company has left. Air Methods, AIRM, one of the winners out here today, had a huge gap down, back up to it and into it with the kind of volume you want to see. Let me get the profile on this guy out here. Air Methods, together with its subsidiaries, provides air medical emergency transport services and systems in the United States. The company operates air medical services, tourism, and United Rotorcraft segments. AMS segment provides air medical transport services to the General Pop as an independent service. So I guess it flies around people all over the place on private small jets. Anyway, looks like a business is up. We'll get the info on this here for my summary out here. Beats forecasts. Let's take a look at this. Inglewood, Colorado-based company said it had net income of 55 cents a share, adjusted to account for discontinued operations and severance costs, which were 61 cents per share. The company exceeded Wall Street's expectations. Zach's investment, Air Medical Transport, posted $249 million in the period for revenues, surpassing the Street's forecast of basically just $1 million more. $94 million in profit. Well, this company got some pretty high margins out here, and probably why its stock's in the 50s out here. But pretty decent reversal out here. One of the few that has come back and filled these gaps with at least similar volume. It came down with 3.2 million shares on the 23rd of October. On a huge gap down, it's gapped right back into it with 2.3 so far. And of course, you've got another hour and 20 minutes to get this up. Auto Bytel popping out here a bit also. This is one of these stocks that can have fairly light volume. And even in the last few days, very light volume, less than 100,000 shares, 700,000 shares today. Another one that had gapped down fairly significantly back in August 1st of last year on 1.3 million shares. It's up on 730,000 shares. Not too bad compared to this, but you'd probably like to see a better candle out here today, but tough to see. Let's see what else is going on real quick. I think there's a few other stocks that are moving, if I'm not mistaken. Did want to look at Amazon here real quick, but maybe we'll have time before it goes. MNST, Monster Energy Beverage Company. And this one, you know, the guy, I guess, that owned the company that was the CEO died, left it to his son. A lot of problems, of course, with caffeine from last year. A lot of issues. But if you're looking for a company that with a possibility of setting up a three-gap play, you probably want to be using this. I'd like to see the second gap have been just a little bit bigger. But this time, a lot of times, this is about as close as you get to a three-gap play. If you want a link on three-gap plays, I've written something up on it, and I can give you to the link to it on TFNN. But, you know, you would like to see that gap just a little higher. But the thing kind of gapped up a couple of times, and I'm going to call it as close to this as possible. If you see any kind of significant move back, down, and lower, then you would really want to be watching this for a huge move down. A little spike out here. You've got plenty of volume. You would like to see more volume in that second gap up, though. So maybe there is one last gap in this thing. You'll know really effectively if this thing pulls back fairly strongly. If it doesn't, maybe it's got one more big gap left in it. MNST out here. And, you know, I think maybe this thing was doing better all along. When I go into any of the fast stops or the convenience stores, kids are always buying huge amounts of these, and the one that gives you wings and Monster Energy Corporation's sugary, highly caffeinated drinks. But everybody says we're trying to get healthy, but everywhere I go, I see McDonald's popping hard this week. I see Monster Energy popping hard. Maybe the whole thing of possibly being healthy out here in the United States, maybe that was a fad that has gone by the wayside. Basically, 72 cents a share, 14 cents better than the street was looking for. Its revenues were $605 million in the quarter, and price target was raised much higher. Ross Stores, ROST, another one out here that's moving decently. It's up about 6.5% most of the day. You know, there's a lot of gaps out in these stocks out here. And this is another one that's very interesting. Energy's pretty good. Nice volume up day. Nice big pop. But probably more interesting about what's going on in the company itself. Beat by 8 cents on revenues. The EPS, though, was below consensus, but it was up higher. It's guiding higher in the future year, in fiscal year 16. And now it's also, of course, the most important thing, a 1.4 billion share stock buyback. Now, for those people that are not familiar with buybacks or new to investing, they authorize up to a certain amount of that. I think in the last survey I saw, less than 20% of the cash that all these companies said that they were buying got bought. If the stock ever dips, they go in and buy in and basically try to keep people from routing it with a short operation on it. So they basically becoming one of their own stock manipulators in the business. Pretty good company, and I go buy one every once in a while. I don't buy much stuff in there, but I do see that most of them have a lot of store traffic, and not a whole lot new in there. Autodesk, another one up today, ADSK. I'm hearing a lot of people start to squawk finally about the pricing policy. And of course, these aren't professional users. These are people that are on like YouTube, and they don't have a budget to go out and buy tools. Autodesk has really gone to the way of spending a lot of subscription money for the software. And that subscription has done them extremely well, up 6% today. Beat its Q4 consensus EPS by a penny, beat on revenues, guided up, though, where most people are having a problem because of the exchange of the dollar. They do a great deal of their business here in the United States, and had a price target raised also. Now, what we're looking at this, though, is a possible false breakout. That's the February 27th of 2014 high that had 11 million shares. Really has not had that kind of volume since. Got close with a nice reversal day back in, July of last year, July 15th of last year. Tried to break through that previous high on November 21st with 7.4 million shares. And now, even if you want to take the most liberal view of Autodesk, it needs 7.4 million shares today to break through that $63 high of November 21st. And right now we've got 4 million shares. So looks like this is going to be a little light. And I may think that all the good news is in on this company as they make the switch, like many of these, to a subscription basis on the software. And maybe a lot of people starting to balk at the price because there are alternatives to this that allow you to buy the software for many of the products for maybe a couple $100. And in 8 months, you'll probably in the subscription model surpass that $200. So it's some people kind of like it, the subscription model. If you're in a business, it's not too bad. My question is how much business are they going to lose on the people on the marginal side that think that maybe it's just getting a little too expensive to hold on to software in that vein. What are we at? FCC vote results question. Is it any way obvious to you that if any business derive more profits as a result? If so, who in your opinion? Okay, got a question in the den. And I guess I'm going to restate the question out here. Because of the vote, who is going to profit from it? Other than the companies and what's going to happen to Comcast and Time Warner. The answer is that probably a zero-sum game because what's going to happen now is the companies like Google that were under the thumb of being cut off and having to pay up, as I like to say in The Godfather, I just want a taste. Just wet my beak. Just give me a little bit of cash. The whole idea of being able to turn off water rights for everybody downstream of you was extremely powerful for Time Warner, and they lied a lot. In fact, they lied huge whoppers, as Mark Twain would like to say, real stretchers that they had done nothing to violate the terms of the FCC, but we'll get into it when we come back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And the question is, who benefits for all this? I think the winners, if there is any winner, is Google. It spent massive amounts of cash, far more than Time Warner and other cable companies like Comcast threw at the problem. And it looks like they won and were able to change the mind of a great deal of people in Washington that were pretty much against it even 9 months ago to for it. And so I think Google's a winner. I think they're a winner also in the fact now that they can push and sue to make sure that no one is messing with their feed. And of course, you can't mess. I guess the decision really is that you can't mess from a packet by where it came from and what it contains. Both of those are cardinal rules of net neutrality. And a lot of people were very afraid because there had been specialty software written for Cisco routers to slow people down, to do very nasty things. And a lot of people out there saying that they hadn't and there was no proof. My guess is that these people were hiding out in the bathroom or something because you couldn't get on the internet for the last 2.5 years without somebody coming out one more time telling people about the proof that they had on that their internet was being slowed down or throttled or all of just a mass of other things, and it was fairly easy to prove it. So I think that they're being disingenuous, a economy with the truth. Anyway, the guy that's been out there pumping that this is horrible, I have a feeling it's a lot more to do with the cash than it had to do with doing what's right. I understand his fear, and that is that the government will abuse it. And we'll be talking about that in the 4 o'clock hour with Tom O'Brien, plus a issue that is much bigger, I think, potentially bigger than net neutrality here, at least in the short term. So we'll talk about that too. We had a question from Steve in Colorado about TNA, and this pretty much looks like everything that we're looking at here, and that is a lot of light volume back up to these highs. My guess is that we are going to see a false breakout, and we've got this very little or low volume move. And a lot of times when these things just creep up here, inch by inch by inch, you do get the breakout. You get a huge price move with little volume. And I could see that we could move 50 points in one day in the S&P cash and see very light volume and see either by the end of the day or the next day that all that was gone. That would be the kind of false breakout that sets a high in a market. If you don't get it, then probably not a bad deal to think that maybe, that if it goes up with volume, then you buy the retracement. But I think you have to be a little bit suspect about what happens. If you're fast with your fingers, then I have a feeling Monday, Tuesday, Wednesday, we're probably going to get a lot of very quick and rapid moves in a handful of stocks that have high short interest. So that is where I'm looking. Other stocks of interest out here, Bank of America downgraded today. This certainly looks like it wants to come back down to the high 14s. There's a couple of lows down there. One that actually came on higher volume on January 16th to 1497. This sector continues not to look all that great. Of course, some of the other stocks getting beat up out here is Herbalife, and of course, it was just down about 9%. I don't know what else can you say. It certainly looks like Carl Icahn is not winning on this one. You can't win them all, as they say. In the meantime, so when you can, not when you have to, we'll see you at the same time, same channel on Monday, and in the 4 o'clock hour on the Tom O'Brien Show. See you then.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.